In the span of about 1 week, Sam Bankman-Fried went from a billionaire, the white knight of the crypto world, and running one of the largest exchanges, to what some people think has become a wanted man. FTX was once valued at $32 billion. It's now effectively worthless in bankruptcy. We're going to talk about that and whether investors will ever get money back. There are multiple billions owed to creditors and big questions. In the wake of the collapse, Bitcoin fell to its lowest price in 2 years, and on Monday, BlockFi, which had been bailed out by FTX, filed for bankruptcy. The rapid fall of this empire has left so many questions about crypto, about the future of it, and whether it can be trusted again. Sam Bankman-Fried joins us right now, live from the Bahamas. Sam, I want to thank you for joining us this afternoon. I appreciate your willingness to have this conversation. And I want to start there because I think that there are so many people who have that question, which is, what is this? And what did happen?
Yeah, look, thanks for having me. And at the end of the day, I was CEO of FTX. And that means whatever happened, wherever it happened, I had a duty. I had a duty to all of our stakeholders, to our customers, our creditors. I had a duty to our employees, to our investors, and to the regulators in the world. I didn't ever try to commit fraud on anyone. I was excited about the prospects of FTX a month ago. I saw it as a thriving, growing business. I was shocked by what happened this month. And, reconstructing it, where are there things I wish I had done differently?
One of the letters I got, I want to read to you, Sam, because it's from a gentleman who said that he lost his life savings. And the subject line is, Sam Bankman-Fried stole $2 million from me. It says, Andrew, can you please ask SBF why he decided to steal my life savings and the $10 billion more from customers to give to his hedge fund, Alameda? Can you ask him why his hedge fund was leveraging long all of these S-coins? I'm going to keep it polite for the kids. Please ask him if he thinks what happened was fraud.
Just to make a distinction here, you look at the US platform, you look at the international platform. The US platform is a US regulated platform with American users. To my knowledge, that's fully solvent, that's fully funded, and I believe that withdrawals could be opened up today and everyone could be made whole from that none of these problems plagued the US platform. Then you look at the international platform, for their non-US users. And as the letter says, Alameda Research did have a long position. And the international platform, it's a margin trading platform. It's a derivatives platform. It's a platform where all the clients were, going on, placing something as collateral and using that to put on a position, whether that's a futures position, a spot position, a borrow. And what the exchange was storing was the collateral from all of those positions. Alameda Research was, one of those that put on positions there. And as I try and reconstruct this, over the last month, I have limited access to data, but my view of it, from what I have been able to see, is roughly that, basically, look, a year ago, Alameda had, I think, something like 10% leverage. Had something like 10 times the assets of the position that it had on. Over the course of the last year, there were a number of market crashes that drove the value of those assets down and the leverage up. I think it was, to my knowledge, still under 2x leverage, as of a month ago. Realistically speaking, no ability for FTX to be able to liquidate that position and generate everything that was owed from it.
But I think the bigger question is where Alameda got the loan from,
Yep.
Which is to say that there is a view that this is about commingling of funds.
Right.
And in that letter that I just read you, this gentleman actually copy and pasted the terms of service for FTX into the email. And I just want to read you this. It says, none of the digital assets in your account are the property of or shall or may be loaned to FTX Trading. FTX Trading does not represent or treat digital assets and users' accounts as belonging to FTX Trading. So how is it possible that Alameda had this loan of such a large size?
So there's that piece from the terms of service, but there were a number of other parts of the terms of service and a number of other parts of the platform on top of that. There is the borrow lending facility, where users were lending billions of dollars of assets to each other, collateralized by assets on the exchange. You had obviously futures contracts where there are leveraged positions on. Now, of course, all of this, it's meant to be the case that these are positions where FTX could, if it needed to, margin call those positions.
You did an interview earlier this summer with Bloomberg, and you were asked about the connection between Alameda and FTX, and you said that obviously came from the same place, because it started that way, and the same original people, but most of the remaining nexuses, you said, have dropped off.
Yep.
I know the people from Alameda decently well, almost as if you don't know what's happening there, and there isn't like a large amount, of ways remain that we are actively working together. Anything like that. Alameda is a wholly separate entity. They're different offices, like different principal offices. We don't have any shared personnel. We're also not the same company. We not all are under the same corporate umbrella or anything like that. And yet it seems like Alameda people were living in the same penthouse where you may very well be right now, all together.
I was viewing it primarily from the trading volume perspective, because that's what drives our revenue. And so when I was looking at how intertwined are FTX and Alameda, I was looking at, well, what fraction of trading volume, what fraction of liquidity on the platform does Alameda represent? That had fallen off from something like 45% in 2019 to something like 2% this year. But in terms of positions and balances, it was a much larger fraction. I hadn't been looking at that. That's a pretty big oversight.
But Sam, I think the question is whether you were supposed to have access to these accounts to begin with. If I worked at a bank and was a bank teller, and I decided to leave the bank at the end of the evening and take the cash that I ostensibly had access to, even if I intended to bring it back to the bank later, even with more money to give them back, I still stole the money.
I mean, look, I wasn't running Alameda. I didn't know exactly what was going on. I didn't know the size of their position. A lot of these are things I've learned over the last month that I learned as I was sort of frantically digging into this on November 6th, November 7th, November 8th. Obviously that's a pretty big mistake on Mark's. That's a pretty big oversight that I wasn't more aware. I think I was scared of, I was nervous because of the conflict of interest. And had a lot of exposure on that side. But
so why wouldn't you have been focused on it if, in fact, that's actually where the profits were?
Well, I don't know that that's where, I think Alameda had made trading profits over the last few years, but FTX had made profits as well. FTX had been a profitable, growing business. And that was more than a full-time job. I didn't have the bandwidth to run two companies at once. I didn't have the attention for it. And again, I was nervous about a conflict of interest between those two, and so was pretty intentional about not being very involved. I substantially underestimated what the scale of a market crash could look like and what the speed of it could look like, and how correlated it would be.
But that just suggests that you were just hoping, perhaps hoping against hope, that this would all work out and that nobody therefore would realize what this commingling was all about?
It's not how I viewed it. And in particular, again, most of the firms had margin positions. Most of the firms had burrows on FTX. The problem here, this was too big. I was surprised by the size of what it was.
But it's not just too big. It's assets that, look, it sounds like there were assets that may have been allowable to be loaned, but then there were assets that weren't allowable to be loaned, no?
So when we scroll back to 2018, or to 2019, I guess, FTX didn't have bank accounts. It didn't have any bank accounts globally. And so I think in the meantime, some of them were wiring money to Alameda Research to get credited on FTX. And I think that was a substantial sum. And I think that the FTX's internal accounting did correctly, effectively try to debit Alameda for those funds, but it didn't happen in the primary account.
So when do you think you knew there was a problem?
November 6th was, that was the date that the tweet about FTT came out. I was a little bit nervous, but not on nearly the same scale. And I was thinking about, risks that were substantially less.
When you say you were nervous, you were nervous the company was going to go under, you were nervous you were going to get caught. What were you nervous about?
On November 6th or before then?
Either.
So I think before then, I was nervous that that would lead to substantial losses for Alameda, and that it would be a bit messy. I didn't think it was existential for FTX. I didn't think it was going to lead to a massive loss for FTX's customers. And on November 5th, I was feeling quite good about that. On November 7th, I was feeling quite uneasy about that.
Let's talk about collateral, because I think this entire experience has been a revelation for a lot of people about what might be collateral. And clearly you were using FTT and Solana and other tokens as collateral, and part of that required you to mark them in a specific way, a value to them.
Yep.
Do you think that you were marking them properly?
In Alameda's case, I don't think I was marking them the way I wish I had from a risk perspective. And I want to sort of differentiate here, like expected value or sort of like worth or something like that from security. And, I think that I don't have any strong statements to make about, what value they're assigned from sort of like, a upside perspective or even a median case perspective. And then, what happened here was a 95% down move over the course of a year, and a 60% down move over a few day period with very little liquidity, and all happening at once in all of these coins in a correlated fashion, in which hedges didn't mean as much also because this was a specific crash on assets associated with Alameda Research rather than all assets. And so, even correlated hedges had limited use there. And a run on the bank at the same time. And all of that are things, in retrospect, I should have expected might happen in an extreme scenario because that's how markets work. And we've seen other examples of that in history where when things get really bad, they get really bad for all of the relevant things at once in a very direct and correlated and quick way.
I want to go back to the BlockFi acquisition for a moment. How much money do you think Alameda, I'd said that they had a lot of FTT, but that Alameda had borrowed from BlockFi at the time of the bailout?
I honestly don't know, but I would have guessed like 100 million, maybe a couple $100 million, but I honestly don't know the answer to that. I wasn't like running Alameda, I wasn't paying detailed attention. That's my guess.
And were you using FTT and Serum and other things to collateralize the loans at BlockFi, do you think? I mean, this goes to the whole idea of both the value of these things and also whether you were trying to buy BlockFi, in fact, to continue to support effectively Alameda or FTX.
Right. It might be. I would guess it was, but to your point, my guess is that like the amount paid for BlockFi was probably bigger than the amount that Alameda had opened with it. I don't know that for sure. Again, but I wasn't even looking at what that number was really. But I think that's about right.
You're in the Bahamas right now. Are you in the Bahamas because you think you can't leave?
No, I'm in the Bahamas. I have been in the Bahamas for the last year, and I've been running FTX from the Bahamas. Been running FTX Digital Market, our primary operating entity down here. With Bahamian regulators and and others in contact. And right now, I'm looking to be helpful anywhere I can with any of the global entities that that would want my help.
How concerned are you about criminal liability at this point?
So I don't think that. I mean, obviously, I don't personally think that I have. Look, I've had a bad month. This has not been a fun month for me, but that's not what matters here. Like, what matters here is the millions of customers. What matters here is all the stakeholders in FTX who got hurt, and trying to do everything I can to help them out. And as long as that's the case, like, I don't think that what happens with me is the important part of that, and I don't think that's what it makes sense for me to be focusing on.
Sam, help me with this. On November 7th, you tweeted and then deleted a tweet that said, quote, "FTX has enough to cover all client holdings. We don't invest client assets, even treasuries. Yep. We've been processing all withdrawals and will continue to be," unquote. You then deleted that tweet. And literally just moments ago, you told me it was on November 7th that things took a turn.
Yep.
You're telling the truth?
So things were changing fast. By November 8th, I did not think the odds were that high that we were going to be able to meet all client demand. And I was worried that there was going to be a substantial liquidity shortfall. November 7th, that was sort of the transition day. And even just the start versus the end of November 7th, I felt fairly different. I can't remember exactly what I was thinking or when I sent that, but I remember trying to think about feeling conflicted about what to say and trying to think about what I could say that I believed. And by not that long later, I no longer believed.
Let me ask you a different question, because this is all around the same time. The New York Times reported that $515 million was suspiciously, in quote, transferred from FTX wallets after the bankruptcy filing.
Yes.
And there have been accusations that this is the assistance, effectively, of theft.
I believe that a few different things happened within a short period there. I think that the U.S. team took actions to seize some of the assets and put it in custody from the exchange. I believe that it has been announced that the Bahamian regulators took some of the assets into safekeeping as well around that same time. And I think there may have, in addition to both of those, also been some actually improper access of assets on the exchange. Right. And I don't know the details of that. I don't have the resources to trace through exactly what happened there. And I don't know who is behind that third part.
I want to go back to one thing about the Bahamas. The Bahamian authorities have now admitted effectively that they ordered the transfer, it sounds like, of certain FTX assets to wallets under their control after the U.S. bankruptcy was filed. Did you help them with that? Did you discuss that with them?
So I can't discuss specifics, but I will note that prior to Chapter 11 having been filed, the Bahamian authorities had placed FTX Digital Markets, the Bahamian entity, which is the primary operating entity of FTX International, under supervision of a JPL system in the Bahamas, with oversight from the Securities Commission of the Bahamas, and were, to my knowledge, taking actions to protect FDM's clients and customers there.
Over the summer, you paid a $2.5 billion loan to Barry Silbert's Genesis. This was in August. And I was just trying to think through the dynamics of what might have been happening at your firm and was wondering, where did the money come from?
My understanding is I believe Genesis tried to call in a large number of loans from Alameda. I believe that happened, and that closed down a lot of positions that Alameda had opened with Genesis and other trading desks. I also think that may have led to an increase of position size of Alameda on FTX in retrospect.
Right. Sam, let me ask you about this, though, because the other piece of it is using your money and influence, and I think there's a question about whose money you were using, but to donate, for example, to the Democratic Party, in large part, to influence regulation. And I think as people have looked through now some of the regulation you were pushing for at CFIUS, for example, some of that regulation would have allowed you, frankly, to, quote, self-certify a lot of what was going on at FTX. And there are people who look at that and say it was all part of a scheme.
So, I mean, unpacking piece of that, when you look at like this, the CFTC regulation there, ultimately there may have been an ability to self-certify contracts, but prior to that, we went through a congressional hearing, a public comment period, a public roundtable, a year of inquiries, and tens of thousands of hours, thousands of pages of submitted documents, and still had not gotten to the point of having a license to offer margin futures in the United States. And so it was an extraordinarily long and hard process that we were going through with the CFTC. It was by far the most intensive regulatory process that I'd ever seen.
Can you speak to the lobbying piece of it, though?
Yeah.
And the donations piece of it? Because I think that's become part of the story as to whether you effectively were influencing lawmakers to do your bidding. And given the state of your current company, questions about whether that should be the case.
So, I mean, lawmakers were not ruling on FTX. FTX didn't have an application before Congress for anything. My donations were mostly for pandemic prevention, and they were looking at primary elections where there were candidates who were outspoken in favor of doing things now to prevent the next pandemic. That was the primary thing that I was supporting with those contributions. And it was on both sides of the aisle, primarily operating in both primaries, because I wasn't viewing it as a partisan exercise. I was not, most of this was not looking at donating to one party to beat the other one in the general elections here. It was, not only was it on both sides, but even within each side, it was between two candidates in the same party, and it was looking at pandemic policy.
Where did the money come from for those donations?
So, basically profits. I mean, it was substantially smaller than the amount of trading profits that Alameda had made over the prior few years.
Related to this, you had a meeting with Gary Gensler. You also met with folks at CFIUS. Do you think you needed to buy your way into those meetings?
I mean, I don't think I need to buy my way into them. I do think it was harder than I would have thought it would be to get to the point of being even able to have meetings with some regulators. And I mean, I spent hundreds of hours, probably thousands of hours in DC trying to get to the point where I could even have meetings with some of the relevant regulators. But that wasn't a money thing. And I mean, there's no donations to Gary Gensler's. He doesn't even have a campaign to donate to in the first place. That was like elbow grease. I mean, that was just asking again and again and again to have meetings with relevant regulators and submitting hundreds and thousands of pages of documents.
You also made big investments in a number of media companies, and I think that's raised a lot of questions about whether you were trying to buy influence. Can you speak to that?
I mean, I think media matters a lot, and I want to support good media ventures. That was the whole thesis there. And, I don't have like governance over any of these. I wasn't looking for governance over them. I was looking to support journalists doing great work because I think what they do is really important. And I think that there needs to be a critical eye on stories. I'm certainly seeing, being on the on the getting the brunt of a lot of that right now. And frankly, I think it's healthy for the world that there is real investigative journalism.
Your parents are law professors. What did you tell them when all of this happened?
I mean, I don't remember exactly when I reached out to them, but I think I called them up and said, "Hey guys, I think there might be a problem. Like, things looks like Alamea's position might be imploding here, and there might be liquidity issues, and I'll tell you more when I know more." That's my guess about roughly what I said. But honestly, that week so much happened. It's a little bit of a blur to me exactly what was said.
And what are they telling you now?
And look, it's been a hard period for anyone who was close to me, and none of them deserved that. And I feel really, look, like a lot of, obviously, the largest number of people who were hurt here were customers, and I feel incredibly bad about that. But anyone who was close to me, including my parents, including employees, coworkers who fought with the company to push forward, were hurt by this and bore no responsibility for that. I feel really bad about that, and I feel really grateful for the support that my parents are still giving me, throughout all of this.
Can you explain the real estate piece of this to us? I think there's been a number of headlines, as you know, about FTX, the company, buying a lot of real estate up in the Bahamas, where you lived, at least at the time, was owned by the company. But then there's also reports that your parents signed and were effectively provided with what seemed like a vacation home.
So I don't know the details of that house for my parents, but I know that it was not intended to be their long-term property. I know it was intended to be the company's property. I don't know how that was papered, and I think that was where it was and will end up. I think they may have stayed there while working, with the company sometime over the last year. When you look at the rest of it, there were a lot of property purchases in the Bahamas. The reason for that is we had, 100, basically 100 Silicon Valley, top Silicon Valley employees come down here to work for FTX, and we were trying to incentivize that and to, make sure that they had an easy way to find a comfortable life, so that they'd be willing to move and help build out the product. And so, those 100 people put together here did end up, buying a substantial amount of property. And I feel bad about some of how those investments may turn out for them.
Can you just speak to the idea of this company that, at least from the public perspective, seemed like a regulated company or something that was very focused on compliance? You would go to Washington, you talk about compliance, you talk about trust. Crypto ultimately is actually about trust. It's about not having to trust others, frankly. It's supposed to be a trustless system. That's why you trust trust it so much, supposedly. But it seems like when you read the stories, it sounds like a bunch of kids who were on Adderall having a sleepover party.
Look, I screwed up. Like, I was CEO. I was the CEO of FTX. And I'd say this again and again, that means I had a responsibility. That means that I was responsible ultimately for us doing the right things. And we didn't. Like, we messed up big.
But there were people, though, who were telling you needed more compliance, no?
There were, but I think that compliance, we were spending an enormous amount of our energy on compliance. We were spending an enormous amount of our energy on regulation, on licensure. We were getting licensed in dozens of jurisdictions. I think, frankly, we were spending probably too much of our energy getting licensed. In retrospect, And there were some places where I think that the reporting and transparency obligations from that licensure actually did help. I think when you look at, FTX US derivatives, I think when you look at FTX Japan, which I think is fully solvent, which I think could make all customers whole tomorrow if it were, the sort of relevant teams were to allow it to, and confused why it hasn't. I think that a lot of what we ended up doing and focusing on was a distraction to some extent from one unbelievably important area that we completely failed on, and that was risk. That was risk management. That was customer position risk, and frankly conflict of interest risk. And there was no person who was chiefly in charge of positional risk of customers on FTX. And that feels pretty embarrassing in retrospect, because that was, you go back to 2019, even 2018, and ask me, why am I starting to build out FTX? What's the point of it? And what I would have said was, look, the existing crypto derivatives exchanges have large risk management failures, that every day there are millions of dollars that are being lost by customers because of risk management failures, that these contracts are paying out 75 cents on the dollar week after week after week because of risk management blowouts, and that needs to be overhauled. And that was what I was focused on for the beginning of FTX. I was not focused on that for the last year or two. I got less grounded from that, and I started focusing on the bigger picture, on future business avenues, on licensure, on a lot of things. And we lost track of a really important part of the business and of the product. And so there absolutely were management failures, huge management failures. I bear responsibility for that. There were oversight failures, transparency failures, reporting, like so many things we should have had in place. I think that a lot of it was on the risk management side.
Let me ask you about that, which is, we had Larry Fink here today, and he had a stake in FTX. And Sequoia and Paradigm and some very big venture capital firms had given you money. And I'm curious if they ever asked you questions about this risk management and whether they bear any responsibility for what clearly now appears, and you're saying, was at minimum a lack of oversight, if not something much worse.
I don't think they bear responsibility. When you look at, you put yourself in the eyes of an investor, of a venture capital firm. What you're thinking about primarily is upside, right? What you're thinking about primarily is investing in a private company and thinking, might this 3x, might this 5x, might this even 10x on the upside cases? And yeah, there's some chance that it will go down. There's some chance that maybe it will go down to zero. But that's counterbalanced by the upside propositions here. And so most of what they were focused on was, I think, like, what might FTX become? What's the pathway to get from here to there? What would it take? What are the missing pieces? Rather than, at the point where you're dwelling on all of the various precise downside scenarios and risks for a prospective venture investment, that means you're not investing. Like, if that's where your head's at, if you think the odds are that that's where things are going to end up, why would you do that investment?
Can I ask you about the drugs? You have tweeted about it. Caroline has tweeted about it. Others have tweeted about uppers and downers and all sorts of things. There have been pictures taken of something called MSAM, which apparently increases levels of dopamine to the brain. It's actually for Parkinson's. Were you taking that as a patch?
So it's funny hearing this. I had my first sip of alcohol after my 21st birthday, and I think I have maybe half a glass of alcohol a year, roughly speaking. There were no wild parties here. When we had parties, we'd play board games, and 20% of people would have 3/4 of a beer each, or something like that. and the rest of us would not drink anything. I see any illegal drug use around me, at the office, at these parties, like, and when I say parties, I mean like having people over for dinner is what that meant. And look, I can't talk about anyone else, like what they're prescribed between themselves and their doctors or psychiatrists. I can say for me, I don't know, like I've been prescribed various things at various times to help with focus and concentration. And I think they have done that. I haven't felt any of the sort of impact that I think people have been theorizing here from it. And it's not a huge impact, in the first place. Anyway, I think these have all just been totally on label use of medications, and I think things that on the margin help me focus a little bit. I wish I had been a lot more focused over the last year.
I may have been unfocused in this last moment because I actually wanted to follow up on the question when we're talking about venture capitalists.
Yep.
Sequoia and Paradigm invested in you, but there have now been questions about the fact that you invested in them, and whether these were what some people describe in the business round-trip deals. Can you speak to that?
I mean, I think well after they had invested in FTX, I don't know the details, but I think there may have been a small investment into some of their funds. I think it was something that we did because we believed in what they were doing. It seemed like a good opportunity, and didn't think too much about it.
I'm curious, just on a very personal level, as we get close to ending this conversation, to the degree that there's been a lesson in this, and that what you see as your future at this point. I know you're taking it day to day, obviously, and I know you're an optimist as well. We've talked about that.
Yeah.
But what do you think realistically is your future?
So, what is my future? I don't know what my far future is. And, when you fast forward, I have no idea what I'm going to be doing, a long time from now. I think when I look at, at the near and medium term, what am I thinking? What I'm thinking is, and again, I don't know what's going to happen, and a lot of it's not in my hands at this point. But I want to be helpful wherever I can to regulators, administrators, internationally, who are working to help FTX's customers. And I want to be helpful wherever I can on anything that could help bring a lot more value to those customers. And, I don't know where that will lead. I can say that prior to filing, there had been a lot of interest in financing, a lot of fairly strong interest, many billions of dollars worth. I can't make any promises about anything, but I would have thought that there would be, a chance for a pathway forward here that would bring more value to customers than what would happen if you just sort of sold everything else for scraps.
Right.
And I don't have confidence. I can't promise you, and I can't promise anyone anything there. And it's not. Those are all things I was reinvesting in the businesses that I'd put everything I had into FTX.
I want to ask you two final questions. Were you truthful with us today?
I was as truthful as I'm knowledgeable to be. There's some things I wish I knew more about, but yes, I was.
And let me ask you this. Do you agree that over time you also lied?
Do I agree that I lied? I don't know of times when I lied. I think, look, there are certainly times when I was acting as a representative, as a marketer for FTX, and when I was looking for how can I, in a way which is truthful, but paint FTX as compelling a way as possible, as exciting and optimistic a way as possible. And I wasn't thinking about, I wasn't talking about what are the risks involved with FTX, there.
Right.
I obviously wish that I'd spent more time dwelling on the downsides and less time thinking about the upsides.
Sam Bankman-Fried, I want to thank you for this interview. I hope that some of the answers have been helpful as we've tried to understand and untangle what is a still tangled story. Sam, I know that this has been a difficult conversation and a tough conversation. And on behalf of everybody here and on behalf of the public, I want to thank you for engaging in it at a time, in truth, when I know you've been advised not to. So thank you so very, very much. Thank you.